Good morning and welcome back to Derive Insights. Today we're talking about a simple covered call strategy, especially for people holding XRP. Quick disclaimer up front, options carry real risk, always manage your risk accordingly, and everything shown here is non-financial advice. Derive just listed FXRP as collateral. That means you can now trade XRP options, spot, and perps on Derive with your XRP working as collateral behind it. So if you're spot long XRP and you think it might go up in the long run, there is a way to make a little bit of yield in the meantime without selling anything. So how do we set this up and how do we deposit FXRP into Derive? We click deposit on Derive, then we choose a network flare, token FXRP. Now you can type in the amount that you want to deposit and then you can choose your sub account, your main account or sub account, of course. Quick note on the numbers. For example, 10,000 XRP at current price of $1 equals $10,000 market value, but roughly 60% of that counts into your margin. So on this test account, I deposited 20 XRP with a market value of around $20, and I can use up to 60% margin, which equals $12 in this case. Now let's move to the clear execution of the covered call trade. Spot is currently sitting at $1. We are now at the September 4 expiry markets for XRP options, and we can pick a strike where we will feel comfortable of selling our upside. We are giving up on upside above our strike price. So we could choose, for example, 10% above current market price, a $1.10 call, and sell. Let's say we deposit 10,000 XRP, we can sell 10,000 contracts of XRP. This would mean a 1-to-1 trade. At market, this right now pays us $82 in premium, and the fee is roughly $1. So we net like $81 on a $10,000 collateral, which gives us roughly 0.8% return over 20 days. A small number, but let's not forget, we did not sell anything to get it. Quick note on this chart. On this payoff graph, it only shows the option, which is why the loss line runs off the bottom. You are still holding 10,000 XRP on the other side of it. So if you put it together, below $1.10, you keep your gains, your spot, plus the premium. In this case, $83 minus fees. Above it, you are capped. 10.8% is the most you make, whether XRP goes to $1.20 or, for example, $2 until September 4. And if it settles above the strike, the call pays out in USDC, not in XRP. Your FXRP is not sold automatically, so if you want to keep it simple, you can also close before expiry. That's the whole thing. XRP as collateral, one call sold against one XRP, you collect premium while you stay long. Thanks for tuning in. And if you have any questions, let us know in the comments.